Welcome back to U.S. Farm Report this weekend. Brian Grady and Jim McCormick joining us to talk markets. Let's start off by talking about the USDA Ag Outlook Forum and what USDA penciled in for acreage. I mean, we were really watching acreage, really watching what would happen on demand. But for corn, Brian, USDA forecasted a nearly 5 million acre decline from last year at 94 million. Is that pretty much in line with trade expectations?
Yeah, I think it is. The general number was about 95, so just a million less. But keep in mind, this is just a very early projection. We'll get the prospective plantings report that does a NASS survey at the end of March, and so that'll give us, or should give us, a better indication yet. But I think that we knew that corn acres were coming down and soybean acres would go up. It was just a matter of how much. And so that will play out as we move forward. But this is kind of the guide rails, I guess, as we move into spring.
Well, as USDA decreased the corn estimate for acreage, of course, soybeans, not a big shock there, Jim, but soybeans, they are forecasting an increase of soybean acres at 85 million acres, though. Are there any surprises there?
I think the one thing was interesting, Tyne, is the combined acre total was closer to 170, or closer to 179 instead of 180. I would have thought maybe that would have come in a little bit closer to 180, but in general, it wasn't a huge surprise. I think on the demand front on the corn is something we need to keep an eye on. They did lower the feeding residual by 200 million year on year. But I would argue this year's feeding residual number is still too high. So, they managed to get that balance sheet below 2 billion. But I think when it's all push comes to shove, the old crop carryout, this year's crop carryout is going to get bigger. That'll bring the carry in and potentially with trend line yields. If we keep this working number right around 94 million acres, we're still going to be looking at a 2 billion plus carryout, unfortunately.
All right. Well, on the demand front, I mentioned we were kind of watching the trade numbers to come out of this Ag Outlook Forum. USDA did include China's commitment to buy 25 million metric tons of U.S. soybeans annually through 2028. Brian, I mean, we don't have a signed agreement for that. So do you think that was justified for USDA to go ahead and include that in their forecast?
Well, 25 million tons isn't out of the ordinary for China to import from the United States. So I don't think it is too unusual, to be honest with you, whether we have a signed deal or don't have a signed deal, as long as we aren't into a trade war again. And so what we watch now is that April meeting where President Trump's supposed to go to China and see if that happens, one, and two, if any news comes out of that in terms of a signed agreement or not. But I don't think the 25 million tons is too much out of the ordinary, just because that's about what China's done in the past on normal years.
Jim, bottom line, though, as you look at everything out of the Ag Outlook Forum, does it look like soybeans are the profitability play for spring, with the forecast of 1030 average price being forecast for soybeans from USDA right now?
Right now, it's getting closer. They're obviously tying the last couple of days. They are trying to buy a few more acres from the corn market. But, from what we're hearing from our clients here, it does still feel like, corn is going to be the crop a lot of guys are going to produce. As you noted, we are going to be down from a year ago. But, the numbers still, when you look at corn price where it is today, it feels like farmers feel they can bushel their way up to profitability a little bit easier in the corn market than the bean market at the moment. So, but either way, it's going to be tough. So the question is, in the next 60 days, can we get the bean market to move even higher, potentially on confirmation of China buying these 8 million metric tons that's been rumored, to give that bean market one more solid boost up to buy some acres? But with Brazil crop being so big, that's going to be a tough ask, I fear.
Well, one crop losing acres in the U.S., Brian, that's cotton. Around 9 million acres is what USDA is projecting. That's similar to what National Cotton Council survey showed last week. But how many acres, Brian, do we need to lose to help these cotton prices?
Oh, that's a great question. I don't know. It seems like the U.S. cotton industry is kind of going by the wayside, to be honest with you. I mean, decades low plantings and just nothing to stop it. We don't have much price response. So we need something fundamental to change in that marketplace. I'm not sure the acreage is the thing that's going to do it. But, without that, we are just going to continue to hemorrhage cotton acres. And we'll see other crops, corn and soybeans in particular. That's two that the National Cotton Council survey mentioned that would be picking up acres in the South, along with some of those other regional southern crops that they grow. And cotton just isn't in favor right now. And so it's going to take more than an acreage cut, I think.
Well, let's switch gears to more geopolitical issues. There are reports that the U.S. is prepared to strike Iran as early as this weekend. Jim, if we would see a conflict there, are any ag commodities at risk?
Well, I think the biggest one's going to be the wheat market, Tyne. I mean, wheat is a food staple around the world. You've seen the funds have been short wheat recently. They have been getting out of it relatively aggressively. It has rallied the price this past week dramatically because I think the world is just very uncertain what's going to happen. So I think the first thing you're going to see is the wheat market rally. The other thing you're going to watch pertain will be what the corn market and bean market do, because I think that will drive the crude oil market higher. I think the White House, we got to see what plays out, Tyne. I think the market's a little bit nervous what could happen because, when we attacked the Iranian nuclear facility a few months back, the oil market hardly moved at all. But the Iranians really didn't push back hard. If this would really get out of control and we really start throwing missiles back at each other, it is going to unnerve the world market, and you're going to see a scramble for food, I fear.
Yeah, Brian, I mean, typically markets do not like uncertainty. So what do you think? How could this potentially play out if we do see this conflict happen?
Yeah, I agree with Jim. I think wheat is the play there. Like you said, we've already seen the funds start to cover some short positions. We have dryness in the plains that continues to build as we move towards spring and the green up of that crop. And so that's a concern as well. And I think right now that the risks in the wheat market are that, they will be caught short and they're getting out of those shorts as a result. Now, I don't think that the funds are going to flip to a long position unless we see something dramatic happen. But for now, they are definitely covering short positions.
Well, some news earlier this week, actually on Thursday, USDA announcing $236 million in food purchases through Section 32. So Secretary Rollins saying, Jim, that the food will be distributed through food banks and nutrition programs across the U.S. But dairy really seems to be the big winner here. $148 million of that 236 impacting dairy. Is this enough demand, though, to move the dairy markets?
Unfortunately, no. I mean, the fact of the matter is what we're seeing in the dairy market is the same problem we're seeing in the corn market, the same market problem we're seeing in the beans. We are just oversupplying the market at this point in time. The efficiency of these cows has just been so good. And like I said, this is a good step, but the fact of the matter is we need to find more demand. And this is, like I said, a step in the right direction, but it's not enough to change the calculus, unfortunately.
Brian, with this mild weather, we've seen a lot of field work happen here in the U.S. the last couple of weeks, a lot of fertilizer getting put on. But as producers are thinking about spring, what is your advice to them? What are you telling them?
Well, do what the market tells you to do, I think, from an acreage standpoint, one. But historically, if it's an early spring, producers get out there, they start planting corn aggressively, and we end up with more corn acres. And so we'll see how USDA's 94 million acres play out. If you get into periods of profitability in 2026, I think that's a definite selling opportunity. Take advantage of it because it looks like you're going to be swimming upstream again this year, and so times are going to be tight. So if you do get to profitability levels, better take advantage of them.
Yeah, Jim, what is agmarket.net's advice right now?
It aligns with what Brian's saying. I mean, the reality is you need to know where your break evens are. You need to get these orders working. If you see how this market moves, Tyne, it moves very, very fast. The funds get in, they get out real quick. And like Brian said, you get that opportunity to hit profitability, you need to take advantage of it. Don't think twice about it. It does look like we're setting up for another tough year unless the weather does not cooperate.
Jim, Brian, thank you so much for joining us. We really appreciate it. Well, we mentioned cotton, but what is the cotton industry doing to drum up demand? Chip Flory joins us for Chip's Corner next.